Hello everyone, welcome back to my channel. You're watching Swathi's Commerce Tutorials. I'm Swathi and I make educational content related videos in my channel. I have already made a series on accountancy made easy and interesting where the part 1 and part 2 had already been covered. If you are interested to know what are these videos on, what did we discuss on this video, please go and watch it now. The link is in the description box below. Okay, without any further ado, let's begin with today's session. That is Accountancy Made Easy and Interesting, Part 3. What are we going to discuss today? That is accounting terminology. Accounting terminology means accounting terms that we can see in this accountancy syllabus. These terms sometimes become a headache for the students because they cannot understand this. So I am here to help you out and make it easier for your understanding. The first term that we are going to discuss is a business transaction. A transaction, my dear student, is an event that occurs between two or more parties related to the business. Here, they exchange either goods, services, or money. Whatever the transaction be, if it arises money or if it arises finance, at that time that will be called as a monetary transaction or a business transaction, and only those transactions will be getting recorded in the books of accounts. Well, I hope you have already know that what are all the books of accounts. The first and the foremost book is journal. From that we record it to the ledger. From the ledger we go to the trading and profit and loss account. From there it goes to trial balance and finally it ends up in the balance sheet. So I hope you know now the new term, that is a business transaction. Then, in order to establish this business, we also require money. But that money has a separate financial term which is called as capital. This capital can be brought in alone by the owner or also by the outsiders, that is, the shareholders, debenture holders, or bond holders of the company. This capital is very much required for establishing the company to run its day to day activities of the business and also to help the company grow in the near future. This capital also helps the company to acquire a lot amount of assets like building, vehicles, machinery, and whatnot. Okay, then let us move on to the next topic, that is drawings. Let me explain this with an example. If I am the owner of the company and I want immediate cash, at that time what I'll do is I'll withdraw that cash from the business account. That is not my personal account. From the business account, if I withdraw and I use that money for my personal use, like to pay the college fees, to pay electricity bill of my house, to pay the rent of my house, or anything else, at that time that use will become for personal needs. At that time, that withdrawal that is made by me, that is the owner of the company, will become a drawing. That will be a liability. Liability means this is not my money, it is the business's money. So I am supposed to pay that money back to the company. That is why it becomes a drawings and hence it is shown as a liability in the balance sheet. Okay, so I hope this is clear. Let us move on to the next. I've discussed that we have to show this in the liability of the balance sheet. Then what is liability? Here it is. Liability is something that is due, that is yet to be paid. There are two types of liabilities, current liability and non-current liability. If you are supposed to pay the money back to a third party within 12 months, that is within 1 year of time span, at that time it becomes current liability. And the same thing, if you are supposed to pay someone, the third party, an amount of money after 1 year, that is after 12 months of lifespan, at that time it becomes long term liability or non current liability. We can also call the current liability as short term and non current liability as long term liabilities. I hope you have understood this liability concept. Then let us quickly move on to the assets. Assets are again of two types, which I have mentioned here is current asset and non-current asset, that is which can be liquidated. That is, if you sell that asset you can generate immediate cash within 12 months, that becomes current asset. And immediate cash cannot be generated within 12 months, that means you cannot sell that asset within 12 months and generate cash, that is non-current asset. But these are not the only two types of assets. There are several other types of assets, like you have tangible assets, non-tangible assets, fictitious assets. These are few other types. First one I'll explain, tangible asset. Tangible assets are those assets which you can see, which you can feel, or which you can touch, like your machinery, like your vehicle that you can see, touch. Intangible assets. Intangible assets are those which you cannot see, which you cannot touch, or you cannot feel, like your goodwill, patent, copyrights. These are those assets which you cannot see, touch, or feel, but yet they are mentioned in the asset side of the balance sheet. Next, we have fictitious assets. Fictitious assets are those assets which do not have any physical substance. I hope you have understood. Our next topic is debtor and creditor. A debtor is an individual who is supposed to pay us the money. I have said that when we are supposed to pay something to other party, that is becomes a liability, and at that we become a debtor. A debtor is an individual or an entity that owes money. Any person who is supposed to pay money to a third party becomes a debtor, and any person who is supposed to receive that amount of money from a third party becomes a creditor. So a person who is supposed to pay becomes a debtor, and a person who is supposed to receive the same amount of money becomes a creditor. The next topic is sales and purchase. In order to run a business, we have to maintain the day-to-day activities of the business, and the major activity that takes place are these sales and purchase. Then what are these sales and purchase? A sale is an economic activity that generates revenue. Here we usually sell goods or services to generate income for a business. And in order to generate income, this is the prominent or the primary source of generating revenue, and this is a must to each and every business. To make this sales, we also require certain raw materials, and that raw materials will acquire only from the purchases. So here purchase is the activity of buying an item either for using it or for reselling it. So I hope it's clear, sales and purchase. Let us move on to the next topic, that is accounting voucher and discount. What are these? I've told that we have made a sales and we have made a purchase, but it is not just a word of mouth. It should be recorded in the books of accounts. In order to record it in the books of accounts, accounts requires evidence, and this accounting voucher acts as an evidence. Whenever we have made any sales or purchases, we get a bill known as a sales bill or sales invoice and a purchase invoice, and that itself acts as an accounting voucher. Next here I have told is discount. In the same accounting voucher, if at all there is any reduction in the invoice price, at that time it acts as a discount. There are two types of discount, a trade discount and a cash discount. A trade discount is offered by the seller where they tell that I am giving you a 5% discount over this sales. That is, if I am selling any goods, so for example of 50,000, and you are the purchaser, I say that I'll give you 5% of discount, and at that time you need not pay that 5%, and the remaining percent amount you will pay me back. That will be the trade discount. And cash discount is, I will not say that I'll give you that discount, but while you're making the payment, that is, I've given you the purchase bill, and while you're coming to me for making the payment, I tell that you pay me 5,000 less, I'll give you a cash discount. That itself becomes a cash discount. That is, discount usually means a reduction in the invoice price. Next is goods and stock. If we want to make this sales and purchases, what are we dealing with? We are dealing with goods. Goods are those items that can be manufactured by the company either for selling it or for reusing it for the next process. And stock are a part of ownership of the business which acts as the company's asset, and this asset can be used by the company for reselling also. The next topic is income, profit, and gain. Whenever we make any sales, the main profit is to income, or that is to generate lots and lots of revenue. That revenue aspect can be discussed here in three types. Here, first we have is income. This income is a revenue that a business earns from the major activity of the business, that is from the sales activity of the business. And if we are making more income, that is We make both income and expense to run our day-to-day operations of the business, and if our incomes are more than the expense, that becomes our net topic, that is profit. And the next topic is gain. A gain is increase in the total value of the asset. We have purchased an asset long back and we had purchased it for 10,000. But now the price of the asset, same thing, is 20,000. That is, the value of the asset has been increased over that purchase price. That becomes our gain. This gain can be seen when we go to sell that asset. The difference amount here in three things is also called as a revenue or the profit in general. Now, if we have made profit, then there are also chances that we become loss or we meet with any expenses. Then what are these? Let us see one by one. Expenses are those costs that a company incurs to run the day-to-day activities of the business. And when the expenses increase over the income, that becomes loss. If we are talking about any major expense, that is on a large scale, if we are talking about expense, that becomes our expenditure. If we are putting out any cost to purchase any long term asset, it becomes capital expenditure. And if we are putting out a large amount of cash to run the day to day operations of the business, but that amount is not small, it is larger in nature, it becomes our revenue expenditure. I hope it's clear. We have discussed a number of topics here. I have not covered entire thing, but only those which will be helpful for you to understanding the basic concepts of accounting. Thank you for watching. If you like my video, please like, share and subscribe to my channel. We'll meet you in the next class. Thank you.